Hello everyone, Patrick here. Welcome back to the SPAC Arena. Today we've got a big challenger, a rival, CIIC, the long-awaited review that a lot of you have been asking. So the company's been making a lot of waves over the past week and investors are very excited about it. But the big question is it going to get Patrick's seal of approval? So as usual, the review is going to be split in 4 parts. What has the company been doing in the past? What's their execution plan to achieve success in the future? Then their financials and valuation. And lastly, how am I going to be playing this stock? So let's get started, but please like and subscribe. It really helps out. And more importantly, let me know in the comments if you're investing in this stock already and if you want me to cover it in the future. Alright guys, today we're talking about Rival. This is a very exciting company coming out of the United Kingdom. As you guys can see in the video, they make delivery vans for companies like UPS, which is one of their big partners, and also electric buses. So yes, it is another electric vehicle SPAC, but this one is very interesting because they are very far along in their development, and even though they are still pre-revenue, they are very close to production and they have a big order book. So the design is very sleek as you can see it, and you should be getting into production in 2021, so the catalysts are going to be fairly soon. Let's look at the basics of the transaction. They are going to be acquired by CIIG Merger Corp, ticker symbol CIIC. And they're going to be merging in the first quarter of 2021. My best estimate is it's going to be at the end of February or maybe early March. You guys know that the SEC is very slow right now at processing these mergers, but based on the timeline of other SPACs, I think it's going to be closer to the end of the first quarter, so there's still a few months left. Now, the company was underwritten at $5.4 billion. The share price has ran up a lot since then. We're going to look at that in much more detail later on in the video, but I want you guys to pay attention to the fact that this company is valued as a unicorn. It's considered one of the blockbuster SPACs for this quarter, and there's going to be a lot of hype around it, right? If you think about companies like SPAQ at a lot of hype, RIDE Lordstown at a lot of hype, it is one of those companies. Now, they're going to be receiving $660 million in proceeds from the transaction, 40 million shares or 400 million of which is from PIPE. So for those of you that like to track that and are a little worried about post-merger sell-offs, well, keep in mind that there's going to be 400 million in PIPE. So the company operated in stealth mode for 5 years. Not a lot of people knew what they were working on until breaking news in January 2020. It was announced that HYLN Hyliion is investing over $100 million in the technology platform. So of course, that's massive validation for the company's technology, but also more than that, it is going to be revenues in the future. And HYLN is one of the big manufacturers when it comes to vehicles. But it doesn't stop there. There is more. A lot of the YouTubers in their reviews have been focusing on the UPS contract, but it doesn't paint the whole story. Yes, 1.2 billion for 10,000 vehicles is great, with an extra 10,000 vehicles as an option. But we've seen other electric vehicle companies that do have some of the orders like these. The issue is that usually they're non-binding letter of intents. This is a completely different story, and that's why I'm really excited about this. It's the fact that they have a strategic partnership. It's not just one customer that might possibly test drive a vehicle, and then if they like it, they'll order a few more. No, they've been working together for a few years now, and they are custom building these delivery vans for UPS, as we saw in the video earlier. They're delivering prototypes right now, and it is going to be a very sticky relationship. So let's see how they describe it. Investment from UPS in the company, strategic cooperation, long-standing trial partnership since 2016. UPS and Arrival have created purpose-built vehicles based on UPS requirements. In other words, they're building these trucks for UPS, custom built, and that means that the UPS is not going to test drive it and then maybe if they like it, they'll buy. No, they're committed to this order. They are going to be buying the 10,000. They will most definitely get the option for 10,000 more. And as they replace their fleet over time, right, they currently have over 120,000. I looked it up online. It's more closer to 125. Well, every year they're going to be replacing some of that fleet, going mostly with electric vehicles because of the regulations with different states asking for electric vehicles. And they're going to be buying more and more from Arrival. So this is excellent. This is a massive partnership with UPS. It's completely different from what we've seen with other companies. So let's talk about the opportunity they're going after. They have 4 different products in the pipeline, 3 of which are in the commercial space, and I do like that. I think it's very smart, and it really increases their odds of being successful. We've talked about it with Lordstown. It's a lot easier to be in the commercial space because these fleets, they're only going to want one model. You don't need to have a lot of different options like with a retail customer where we would want different colors, different trims, different entertainment systems. These fleets, all they care about is the cost and the functionality. So if they can deliver, they're going to get a lot of orders from these, and it's going to be a lot easier for them to produce them and develop them if they only need to worry about one option, right? One color, one trim. So the first product they're going to be working on is the electric bus in 2021, start of production way next year in Q4, and then they're in advanced discussions for the orders. So they already have a letter of intent with a company called Ember. I'm not quite sure about the size of this company. Are they going to be ordering 100 units or 1,000 units? Regardless, these are units that are very expensive, right? This is not a $50,000 vehicle. This is probably a few $100,000 vehicle. So even though the size of the market at 131,000 is a little bit smaller relatively, if they can get some market share in that market, that is going to be a fairly good source of revenue. And often we talk about those transition products, right? It's not going to be their flagship product, but it's going to help them get to the bottom line, right? Get revenues and then some profits. Next product is the delivery van that's going to come into play in 2022. That's the one we've mostly been paying attention to because of the UPS contract. Well, they will start production in Q3 2022. And guys, like, you have to be really patient because that's at least a year and a half from now. So this is more of a long-term play, of course. So they already have 10,000 orders, but really here you need to pay attention to something. A lot of the times people complain when one company is too concentrated in one company, right? If they only had the UPS contract, well, you could say, oh, what happens if they lose this contract? They'll be in trouble. Well, here they already have other potential partners. They have other 5,000 units sold, 3,000 of which are letter of intent. So of course those 3,000 are not committed fully yet, but you see that they do have more sales. They're not going to entirely depend on UPS. We've seen now that can be a problem with companies like Workhorse that almost entirely depend on USPS contract. That's never come. So the total market for these vans is about 2 million units per year. So that is going to be their main source of revenues for a long time. This is the big market. This is a market where, from what I've read, there have a lot of changes coming. Fleets have to adapt to the new regulations. So there's going to be a lot of movement in this sector. And this company is poised to really take advantage of it because they're going to be one of the first movers, one of the first companies to actually be able to deliver these trucks. So they have 2 more products in their pipeline, the first of which is a bigger and better version of their delivery van, which is also going to be starting production in Q3 2022. So this is also included in the UPS order, and my guess is that UPS is going to buy smaller vans, bigger vans, and depending on the volume of mail that they have to deliver on a certain route, they'll just assign a different size of truck. Now, the 4th platform is the small vehicles in 2023, and I personally was not able to find a lot of information about this one. In fact, if you go on their website, you can see in the products, they talk about the bus and they talk about the van, but they don't really talk about the small vehicle. So are going to be competing with sedans like Tesla, or are they going to do like more small mini cars? It is hard to tell. I'm not really sure yet. We'll have to see in the future when they announce it. All right, guys, before I get into the revenue projections and the valuation, we do need to talk about the microfactory approach. This is a game changer, potentially. This sounds like a great idea on paper. We'll have to see if they can execute on it. So traditionally, what vehicle makers do is get these huge plants, like the one at Lordstown, 6.2 million square feet. And the business model is to crank out as many units as possible. This is the Ford model, right? The more units you produce, the lower the cost, and that increases your profit margin. So that's what Elon is doing with the gigafactories. Arrival says, no thank you. Possibly that works for others, but we're going to go a different route, because if we copy what others are doing, we're not going to be successful. So they are going to be doing microfactories. This building is much smaller than the other ones that we just saw, the big plant, and because of that, they're going to be a lot more nimble. Every time they get a customer, let's say that they have a lot of customers in the eastern part of the US, they'll just build a microfactory that's going to produce about 10,000 vans per year. here. Let's say that they get a customer in Brazil. Well, they can go to Brazil, build a microfactory, and start producing there. So each of these microfactories is only going to be taking 6 months to deploy. So that deployment time is going to be much quicker than, let's say, a gigafactory that takes, I'm not sure, like 2 years, maybe something like that. And is also going to be much cheaper. This is going to cost about 120 million versus the 240 million plus from the bigger plants. So here you have totally different business models. And again, it is very hard at this point to say, are they going to be successful with it? If you look at the different companies, you have a Lordstown. Lordstown are the means of production. They don't have their own technology. SPAQ Fisker, they have neither the technology nor the production facility. It's the opposite with a company like Tesla, which has the production facility and the technology. So in a case like Arrival, they're kind of going both ways. They have the technology, they have their own means of production. So in that regards, they're copying Tesla, right? But at the same time, they don't want to go that full route of building those giant factories that are very fixed. Because if you think of a plant like this, there are a lot of fixed costs associated with it. Whether they're producing or not, you still have to pay to keep the lights on. Still have to have employees working all the time. You have big pensions plans. So because of that, the small microfactories is going to give them a lot more flexibility of being nimble and going where their customers are. So the analysis is almost done. Now we have to look at the projected revenues and the valuation. And guys, let me be really upfront. The valuation on this company is very rich. You are paying a premium because this is considered a unicorn and it is a hype stock. Let's be totally honest about it. But good reason. You guys see how much potential the company has. But now you have to ask yourself, are these numbers realistic? Here's what they project. 1 billion in 2022 in revenues, jump up 500% to 5.1 billion in 2023, and then 14 billion in 2024. Those are huge increases. Is it possible? Maybe. I mean, the thing is that we don't have access to the books like CIIG did when they underwrote the company. So you have to ask yourself, is the company going to deliver on its promise? If you do think so, then the valuation is not that bad. But if you're skeptical, then we'll have to be a lot more careful with our investment. Now, they expect that they're going to be cash flow positive in 2023. If they can achieve that, that would be great. Profit in the end is always the solution to every problem. If the company makes profits, that's going to be a really, really great sign. And that's going to help with the valuation. Now, if we look at the breakdown, according to them in 2024, they would make $3.7 billion in profit, in gross profit. That, of course, would be fantastic. That would bring them as a leader in the electric vehicle business, right? Not a lot of companies are making that kind of profits. Even Tesla is much, much, much lower than that. They don't have that profit margin. So the revenue breakdown would be the vans at 49%. That's going to be their flagship product. Then after that, you have the bus, which I call kind of more of a transition product, but according to them, it is still going to be almost one quarter of their business in 2024. Then you have the large van at 17%, and then the small vehicle platform at 12%. So that's a pretty decent breakdown. As you guys can see, the company will have different sectors that they're going after. And eventually, if the company is as successful as they are, and they can generate 3.7 billion in gross profit, I have no doubt that after that, they might go into other markets, right? In the beginning, they want to focus mostly on, I believe, taxi fleets. But then after that, they could go after consumer products. So what is the company's valuation, and is it overvalued or undervalued? Does it make sense? Well, when it was underwritten by CIIG, right, the company was at 5.4 billion, but that is at the share price of $10, the IPO price. Now, as of me filming this, the share price is at $17, and that gives the company a valuation of 9.6 billion. Now, is that overpriced? Is that overvalued? Well, it really depends if you believe in the projections that in 2024, they will get to 14 billion, right? That is 14x their projection from 2022. If you think that they can reach that, then 9.6 billion isn't that bad. I mean, would you pay 9.6 billion if they can get to 14 billion in revenues, including 3.7 billion in profit? Probably, right? But at the same time, if you doubt that they'll get there, right, 14x is a big number, then 9.6 billion might be a little overvalued. Now, guys, remember this. right now the electric vehicle is very, very difficult to give them a fundamentally sound valuation. You guys know that people are pouring tons of money into them almost irrationally. So the only company that's really post-revenue is Tesla, and you guys know that they have a very, very high PE ratio. All the other competitors in the EV space, the Lordstown, Nikola, you have Hyliion, all of those companies have very rich valuation of their own, even though they're pre-revenue. So let's look at some of them. You have Lordstown at 4.3 billion. Nikola at 10 billion. So when you consider 9.6 billion for Arrival, doesn't that seem like not as bad? You guys know that I'm usually kind of skeptical. I'm more cautious, right? I don't want to pay huge premiums for these companies. But when you compare them to some of their competitors in the EV space, 9.6 billion is rich, but it's not totally crazy rich. I think that at $17, there is still meat on the bone, right? If we look at the chart, it went up really, really quickly. Now, of course, I don't know when you're going to be watching this video. If you watch it in a couple of weeks and the stock is at $30 and the company is valued at $30 billion, well, then I would say it's absolutely not worth it, right? Don't invest in the company right now. But as of me filming this at 17, I think the company has potential both as a short-term momentum play and a long-term buy and hold. In the wrap-up, I do see a lot of similarities between Arrival and Lordstown. If you guys remember, there was a lot of hype around Lordstown and it went parabolic. It very quickly went up to $33 before just falling off a cliff and going all the way back down to $13. This is the perfect type of price action for both short-term momentum plays and long-term buy and hold. If you're going to go for short-term profits, which I probably will, you want to open a position fairly soon, right? And then you'll catch that wave up. Let's say it goes up to $25. Then I'll exit the position through my stop loss. I'll just get stopped out at, let's say, 24 as it goes down. And then I'll have captured that $7 in profit. Now, the share price will likely go down. It happened with Lordstown. It happens with almost all of the SPACs eventually as we get closer to the merger, because remember, there's 3 months before the merger, and after that, there will be the warrants that can be exercisable, and that's going to put selling pressure on the stock price. So because of that, it is also very likely that we will see that big dip that people want to look for when it comes to opening their long-term buy and hold position. So overall, this stock gets my stamp of approval. I see a lot of promise for it, mostly because unlike companies like HYLN, which I talked about recently, has a lower floor because they don't have those firm committed orders already. Well, it's not the case with Arrival. The floor is much higher because even though it's a pre-revenue company, it has such a close relationship with UPS that those orders are very firm and committed. It is almost guaranteed to happen. So because of that, that brings a lot more certainty for the stock. So guys, let me know what you think. Leave me comments below. Tell me if you're going to be buying into it. Short-term play, long-term buy and hold. I can't wait to see what you guys have to say. I'll see you guys in the next video. Thank you for watching.